And now we're going to talk about transportation expenses for your business and how we can deduct them. The big one we're going to talk about is auto, because almost every business has some sort of auto expenses in their business. So let's take a look at that now. All right, so let's talk about transportation costs to your business. Basically, anything you do to get to point A to point B is going to be travel expenses, and it's probably going to be deductible as long as it's ordinary and necessary, has a business purpose, and is reasonable. So it doesn't matter what mode of transportation you use to get from A to B, you can deduct it. The most common one, obviously, is auto expenses. And you have two choices here, mileage or actual expenses, and we're going to talk a little bit more about those later on. One thing we do need to remember, and this is a big one, is you do not include commuting mileage. Commuting mileage is basically to get from your home to your normal working space. So in my case, where I live at my house and I work at my office and I go there every day, that is commuting mileage, and nothing associated from getting from my home to my office is going to be deductible. It doesn't matter if I'm putting gas in my car to get from my house to my home, or if I'm taking an Uber or the subway or whatever to get from my house to my office. None of those fees are going to be deductible that I'm using to get to work. And remember, like I just mentioned a while ago, it must have a business purpose. I can't just, if I'm driving to lunch, I can't write that off unless I'm driving to lunch to meet with a client and talk about business. If I'm just going to Taco Bell to grab a quick taco, that's not going to have a business purpose. And of course, it must be ordinary and reasonable. So let's talk about commuting a little bit more to and from your normal work site. And normal can change over the years, and it might even change every month. But going to and from your normal work site is commuting mileage. Going to and from other work sites is not going to be commuting mileage. And if you go from home to somewhere where you're temporary working, that's not going to be commuting mileage. So oftentimes I'll leave straight from my house and go to a client's office to work a few hours there. And that's not going to be commuting. That's going to be just normal business purpose deductions. So general rule, from your home to your regular work site, commuting, not deductible. Going to anywhere else is probably going to be deductible for you. And you can always deduct optional cost of hauling tools and equipment around. So when we look at auto expenses, we have this either or. We can either do mileage rates or we can do actual expenses. And here's just a brief list of what actual expenses encompass. This is not a complete list. Any money you spend on your vehicle to keep it operating and on the road is going to be part of these actual expenses. And so you can either deduct the actual expenses of the vehicle or the mileage. And this mileage rate changes every year. This is the 2019 mileage rate. You can see it right here. And you can see it is up quite a bit from the 2018 mileage rate. Now you might say, well, what's the 2020 rate and how would I find that out? Well, let me show you what I would do if I was trying to find out what the mileage rate was. If I wanted to find out the new mileage rate, I would go to irs.gov and I would use the search bar and I would type in 2020 mileage rate. You hit search and it's probably going to be the first result. And here it is. It says the IRS issues standard mileage rate for 2020. And it's going to tell you, they normally issue this late in the previous year. So in December of 2019, they issued the rates for 2020, and it's going to tell you for 2020, the mileage rate is going to be 57.5 cents for each mile, which is down half a cent from 2019. You also get some other mileage rates for medical. So if I'm driving to the hospital to have a procedure done or whatever, I can deduct 17 cents per mile for medical purposes. And you can also have one for charitable purposes. If you drive to like Meals on Wheels, delivering food to the elderly and shut-ins, you can deduct 14 cents per mile as a charitable contribution. So this is where you could find out the mileage rate for any year. So maybe you're doing an old tax return and you wanted to find out the 2017 mileage rate. Well, I would just do the same search because you're probably going to get the same answer. And here's even a summary page that will list all the mileage rates for the last few years. So this is where I would come to get mileage rates. So one thing I would like to point out also is once you start using the actual expenses, you can never go back to mileage for that particular car. And so you really have to evaluate the effects of using actual expenses. It might be a great benefit this year because it's higher, but what's going to happen in the next few years? Are you still going to have a lot of actual expenses? I mean, maybe you had to put a new transmission in a vehicle this year, and so it made the actual expenses way higher. Well, you're not going to do that next year. Next year, maybe mileage would be way higher. So you've really got to evaluate and consider whether or not switching to actual expenses is the right move this year, because once you go to actual expenses for a particular vehicle, you can't go back to mileage. If you wanted to start using mileage again, you'd have to get another vehicle. And some costs are considered separately. So it doesn't matter whether you're using actual or mileage, you can still deduct these costs right here because they are separate, treated separately than an auto expense. So let's look at an example of this. Henry uses a truck for business and personal use, and this is the most common thing we see. If you have a vehicle for that's 100% business, it's a lot easier, but most people use their personal vehicle for business and purpose, for business and personal, and that's where we have to do some allocations, and so that's what we're going to look at here. He drove it 15,000 miles, of which 12,500 were for business, and here's his actual expenses that he incurred to operate his truck for that year. And we're also going to assume depreciation would be $5,000, and this would be 100% business because we would put it in, we would calculate the depreciation on only the business portion. So we're assuming this is all related to the business here. So should he deduct mileage or actual? Well, the first question I would say is, well, what did you do in 2017? We're looking at a 2018 return here. So I'd say, what did you do in 2017? And if Henry said, well, in 2017, I deducted actual expenses for this vehicle, my answer for 2018 would be, well, since you've already elected to do actual expenses, we have to do actual expenses again in 2018. And in fact, we've got to use actual expenses until you get rid of this particular truck. So, but if he says, oh, well, this is my first year to have the truck or to use the truck in this business, now we can do some evaluating to figure out which one we should do. So let's look at mileage first. Real easy. We already know he drove 12,500 for business. So we know the mileage rate for 2018 was 50.545 per mile. So we'd multiply that out. Tolls are considered separately, and these were all for business. So we don't have to do any further math there. So we can get to write that off. But now interest on his loan was $900. So, but here we have to do some allocating. First thing I would do is come up with my percentage of business use. 12,500 business miles divided by the total miles driven lets me know that he uses his truck about 83% of the time in business. So we're going to take 83% of his total interest to come up with $750. So now we would add those up, his mileage, his tolls, which were 100% business, and then his interest, which we allocated out from the $900 to get $7,682 of mileage expenses for this vehicle. So now let's look at the actual expenses. So now we have to use the allocation, 83% again, on all of his actual expenses. So fuel, he spent $2,800, but 83% of it is $2,300. Insurance, he spent $1,200 altogether, 83% is $1,000. So we're just doing that on down the line, except for tolls, because tolls is a separate category, and we've only listed the business tolls here. Interest, same thing, just like we did up here for mileage, we're going to come up with 83% of the interest for business for the interest. And then we get to add in depreciation. Like we said, that's 100% business. And so now we're going to find out that it's $9,744. So this deduction is $2,100 more than this deduction this year. So it would probably be beneficial to use the actual expenses for this vehicle this year. The downside to this is, what about next year? What about 6 years in the future? Vehicles are depreciated at 5 years. So on his 6th year, he's not going to have any depreciation. And this number is going to drop down to $4,700 compared to $4,600. And now we have about a $3,000 difference. And so now we would want to evaluate, well, how long do you plan to own this truck, Henry? Are you going to keep it for 20 years or just get rid of it after 5 years and buy a new truck? Because that would affect how depreciation. If he's going to keep it for 10 years, we know for 5 of those years, we're not going to have any depreciation, and we'd have to try and evaluate whether or not it's better to use the mileage and take a lesser deduction in the early years so that we can have a bigger deduction in the later years. I know that sounds really complicated, and truthfully, most people don't do this. Most people just worry about the mileage because they just track the business miles and go from there. Because like I said, this starts getting a little confusing and a little complex on trying to calculate which way is better. If Henry said, I buy a new truck every 5 years, or trucks only last me 3 years until I drive them into the ground, then I would probably be thinking that depreciation would make it worthwhile, and so he'd probably want to use actual expenses on it. Or if he said his truck was really old and he has to repair it every year and he incurs a lot more repair bills every year, then that's another factor to consider. But again, I know we're getting a little more complex than we need to. Like I said, probably a good 80% of my clients just use the mileage. So one thing that the book really didn't talk too much about was the mileage log, because you've got to keep a logbook to track your mileage. And this is where it gets kind of a little bit of a pain. So one of the things we point out is mileage is the most common deduction because it's the easiest, but the record keeping is a pain because you got to keep a contemporaneous log, which means as you go along, and you must note the business purpose in the log. You can use an app to do this, and I use Mile IQ. I don't get paid from them. It's just what I use. So this is a good app to use, and all it does is it just tracks. You don't have to hit start or end or anything. It just knows when I'm driving, and it records it in my app. And then at the end of the night, I just go through my daily trips, and I swipe left if it's personal and swipe right if it's business, and it'll generate a log for me at the end of the day. And it'll let me know where I started, where I ended, and you can even name those locations. So like my clients I have in there is a named location. So it'll say from office to Bob's work site. And so now I know exactly what I'm there for. So let's look at some of the pros and cons of using mileage or actual. So actual, the biggest pro is depreciation, because with vehicles being a $50,000 vehicle is not uncommon now. Divided by 5 years, that's almost $10,000 of depreciation every year. So that's a big pro, assuming 100% business use. If you're only using it 20% business, we're only going to get $2,000 of depreciation every year. The con can be recapture, and we'll talk about this later on when we get to depreciation. But just briefly, if you use some sort of accelerated depreciation on your vehicle, like Section 179 or bonus depreciation, we have to look at it and compare it in terms of straight line depreciation when you sell that vehicle. So if you don't keep that vehicle for 5 years, which is the depreciable life of it, and you sell it after, say, 3 years, we might have to recapture the difference between your accelerated depreciation over your straight line depreciation, and we would recapture it as ordinary income and pay tax on it. So this is a big con right here. So I will often ask clients when they say, I think I want to do actual expenses because I'm buying a new car, so I want to be able to depreciate it. I will ask them, well, how long do you typically keep a vehicle? Do you typically trade it in every 2 or 3 years, or do you typically keep it, 5 years or longer, just so we can avoid this recapture? And if they say, well, I typically keep it 2 to 3 years, well, we would not do any type of accelerated depreciation because there wouldn't be any point to it because you're going to have to recapture it later on. Another con is you still got to track mileage unless it's 100% business use. So we have to know how many miles you drove your vehicle for business and personal, so we can have that ratio so we can apply it to all of your actual expenses. Now, if you can state that you drive that vehicle 100% business, you don't have to worry about tracking your mileage because 100% of it is all going to be business. Mileage, like we've already talked about, the pro is the easiest, and it's the best if you drive lots and lots of miles out here in Grayson County. It's super easy to track up 30 or 40,000 miles in 1 year, and so that can easily be a $20,000 deduction, and all you have to do is track mileage. The big con is the logbook. Apps are making it a heck of a lot easier these days, so whenever clients start talking to me, I push Mile IQ, or there's multiple other ones out there, but it's automatic, and that's the big thing, because people are the worst at trying to track things that they've got to track. So anything we can do that makes it automatic, like Mile IQ, is a big plus in my book. So the con is the big negative, but the apps are making it easier. So let's look at this logbook here. Truthfully, I don't think this logbook would work if you were audited by the IRS, because it just doesn't tell you enough information. All it's saying is you drove 14 miles this day. Where was your starting point? Where was your ending point? Where did you go? What was your business purpose? It doesn't tell you any of that stuff. And so an IRS auditor could really push it and say, this doesn't meet the minimum qualifications, and so we're not going to allow it. And you can see just for this, what is this? Looks like a 6 months or so, they drove 4,500 miles and they would lose, that deduction. So if you drive 20,000 business miles, you're probably getting about a $12,000 deduction for those mileage. And if you keep a logbook like this and get audited, they're going to say this doesn't work. So therefore, you're not entitled to your mileage deduction, and you would lose a $12,000 deduction just like that. So now this small logbook, on the other hand, this is beautiful. I've never seen one like this in all my years of preparing taxes because, like I said, people are lazy and they don't tend to track everything like they're supposed to. But this is more in line with what an app would prepare for you. This tells you quickly where your starting times and ending times and your odometers were, where you were at and where you went, and what the business purpose was. And so this is why I love this. Don't ever see anything like this. But this is what you really need to do, and this is where I'd highly recommend you use an app to track it, just so you can do it. One other thing I want to point out about mileage is people often forget about other mileage. They just think of going to a client's office or something, but there's lots of other ordinary and necessary trips you're taking. Is going to the bank to make your deposit for the week an ordinary and necessary business expense? Absolutely. So why can't we deduct that mileage? Well, we can. We can absolutely deduct that mileage. Is going to Office Depot to buy office supplies for your business an ordinary and necessary business expense? Absolutely. So we can deduct that. Is taking a client out to dinner at a restaurant in Dallas, is that ordinary and necessary? Sure it is. So we can deduct the mileage to go down to Dallas for a business meal or meeting with a client. So don't get focused on just trying to track the mileage of your main business purpose going to your clients or whatever. You want to track anything that you can say had a business purpose and was ordinary and necessary. All right, so that was a look at transportation expenses. And now we're going to start looking a little more in depth about what happens when you get to where you're going with travel and meal expenses.